In this video, I'm going to explain how transactions affect on the accounting equation. So here I'm going to indicate as an increase or decrease on assets, equity or liabilities due to each transaction. Let's take the first transaction. Here I have included the short form of the transaction, capital introduction. Capital introduction means owner invests his private cash or a private property to the business as capital. So what happens to assets? Let's say the owner invests cash to the business as capital. Then what happens? The asset called cash increases because of this transaction. This means the total assets of the business increases. So we just write increase or decrease. So because of capital, the equity of the business, or in other words, the value of assets belongs to the owner of the business increases. Assets increase and also equity increases. Now let's take the second transaction. Obtain a bank loan. Now if the business obtains a bank loan from the bank, the business receives cash. Cash is an asset, so cash increases, therefore the total value of the assets also increases. So let's write increase. What else? Bank loan is a liability. So what happens to the total liabilities? Liabilities of the business also increase. So let's write increase. Now let's take a look at the third transaction. Credit purchases. Let's say the business purchases stock of goods on credit. So what happens? When the business purchases stock, the stock of the business increases. On the other hand, since the business purchases stock on credit, the creditors, the liability called creditors increase. So what are our two impacts? Assets increase and at the same time, liabilities of the business increase. Fourth transaction, repayment of bank loan. Repayment means settlement of bank loan. Now what happens if the business settles a part of the bank loan? Our impacts will be the exact opposite impacts of obtaining a bank loan. Because when the business settles a part of the bank loan, cash of the business will decrease because there is a cash payment. On the other hand, the liability called bank loan will reduce. So our impacts are assets decrease, also liabilities decrease. Now what about payment of bank loan interest? Remember, bank loan is a liability, but bank loan interest, this is an expense. So if the business pays bank loan interest, the business has to make a cash payment. So cash of the business will decrease. This means assets decrease. So we can say assets decrease. And on the other hand, because of this expense, the equity of the business decrease. Because we know that expenses lead to decreased equity. Expenses lead to decrease the value of assets belongs to the owner of the business. So here we consider sole proprietorships. Right, now let's take a look at the sixth transaction. Received interest income. Now this means, for example, let's say the business opens a fixed deposit. Fixed deposit is an investment method. So fixed deposit will generate interest income to the business. So in this case, the business receives interest income. So what happens to the assets of the business? The assets of the business increase. Why? The business receives cash as the interest income. So assets increase. Also, we know that income leads to increase equity. Income leads to increase the value of assets belongs to the owner of the business. So equity also increases. So let's say increase. So remember, expenses lead to decrease assets and decrease equity. And on the other hand, income leads to increase assets and also increase equity. Okay, now let's take a look at the last three transactions. Cash drawings. Here, cash drawings means the owner of the business withdraws business cash for his personal use. So we know that definitely the cash of the business reduces. This means assets of the business decrease. So we can say decrease. And because of this drawing, the equity of the business also decreases. Since owner takes business assets for his personal use, the value of the assets in the business that belongs to the owner decreases. Right, what about stock drawings? Here, the owner withdraws stock of the business for his personal use. So it's obvious that stock of the business reduce. So this means assets of the business decrease. And on the other hand, equity of the business decrease because of drawings. What about payment to a creditor? Now, who is a creditor? This is the credit supplier of the business. The business owes to the creditor. So if the business pays a cash amount to a creditor, the cash of the business decreases. This means assets of the business decrease and creditor is a liability. So the total value of creditors of the business reduces because the business pays cash and settle its liability towards this creditor. So on the other hand, liabilities decrease. I hope you understood how transactions affect on the elements of basic accounting equation. Make sure to watch all the videos in this video series called Accounting Equation. See you in another video. Don't forget to subscribe.